Frank Benzimra, he's head of Asian equity strategy at SocGen, joins us right now on the phone line from Hong Kong. Frank, good having you. Thanks much for joining in. How are you penciling this in? The unpredictability, can it drag equity markets much lower? Because a lot of people are saying, oh, the damage is done and this is a dip that should be bought. My question is why?
What we on the equity market, we need to look at what kind of downside you had already, and if you look at the S&P 500, we are around 8%, something like this since the peak. And what we were telling at the beginning of the outbreak is that if we see some risk of a pandemic, if the things are getting worse, are getting out of China, there will be some correction on the global equity market of at least 10%. And this is actually what we are seeing, and this is for the first time in the last 3-4 days, or let's say almost since last Friday, we are starting to see the market reflecting the downgrade in earnings that we will have without doubt when the company are going to report in the first quarter. So now the question is whether we will have just a 10% correction or something a little bit more sinister. And I think it is important to look at the mechanism of the market and what happened since the outbreak. And if you have one asset class which has really collapsed, it has been oil price. Year to date, I think we are probably more than 20% down now on the barrel, and this has opened the door for the market to start to reprice some Fed cut, to have the nominal yield rising. And in this context, you had all the so-called long-duration assets, so the tech companies, the software companies, the FANG, which did very well because what they need is to have lower and lower interest rates. But now the question is it going to be enough? If the Fed is cutting interest rates, is it going to be enough to support the market? And then this is really, it remains an open question. And what we think and the central scenario on which we are working is we still see a 10% correction in the market. So probably we are not yet down with the downside. But if the things are really getting worse, if the outbreak is getting to the US, then you could have some further downside.
Frank, just one more question. So we now have official confirmation from the WHO that the number of cases outside China are higher than the cases inside China. Is that proof enough for people to turn risk averse? And just a follow-up, are money managers, we've seen outflows from EMs at large, from Asia and from India as well. Are money managers wary of putting money to work, or are they saying that if this gets contained, we will put money back in a hurry?
Well, one thing that we could note on the last part of your question. So the positioning on the market, whether it is on the S&P or some Asian market, is not aggressively buyer and was not aggressively buyer before the outbreak. So, and this, for example, the hedge fund position on the S&P 500, they were pretty neutral at the beginning of January. So there is no heavy positioning on the equity, and we could expect that if we are seeing some sign of containment, and especially in Korea and especially in the country where there has been some severe contagion, then the market would very certainly rally. And if you look what's happening in the US, the short term is, from a fundamental point of view, is always very, very, very difficult to analyze, because you could say that roughly 80% of the volume are coming from algo trading. So then what you need to look is what the gamma positioning, for instance, or those kind of volatility parameters. And what you can see is that there have been some heavy selling caused by this algo trading. So it also means there could be some heavy buying coming back. So I would say that if we are seeing some containment, there is little doubt that we will see the market reverting to a more bullish view. Now, how we can position on the market, I think it is very important to be aware of the dispersion. The dispersion of the market. There is definitely some sectors that I don't want to touch wherever it is.
Sure.
Tourism related sector, it is not cheap enough. But other in the industrial sectors, it starts to be very interesting.